John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hey there, this is John Ulzheimer. I am a consumer credit expert. Got almost 30 years of experience in the credit industry. Spent time at Equifax, which is one of the 3 national credit reporting agencies in the United States, and FICO, which is obviously the company behind the FICO credit scoring system. So I often get questions, well, almost constantly get questions from consumers about what's a good credit score, what's a bad credit score, where do I fall kind of nationally among the kind of continuum of credit scores. And so that's what I'm going to spend some time today talking about, the average credit score in the United States and where you fall relative to the average. So all general use credit scoring systems, those built by FICO and VantageScore, have a published score range of 300 to 850. And the higher the credit score, the better it is for you, because lenders are going to treat you better because you're a lower credit risk, and therefore you're more likely to pay your bills on time, and therefore you're more likely to get better offers from lenders because they can be more aggressive with you because they feel comfortable that you're going to pay them back. Everyone who has a credit score is going to fall between 300 and 850 on the general use generic scoring systems. There are obviously exceptions. There are other scoring models that have what are called longer ranges. But 300 to 850 is where most of us are going to fall on a general use credit score. If you fall outside of that, there's usually an explanation, but we'll get to that in another day. So most people that I hear from have poor credit scores. People who have credit scores in the 800s don't tend to contact me asking, hey, how can I improve my score? Why not? Because they don't need that advice. They already have good scores. They've already figured out how to earn and maintain great credit scores. The people I hear from are generally the folks who have either poor credit scores or otherwise need to improve their scores because they can't get loans or their options are limited. And so it kind of begs the question, well, what's, in the US, what's the average credit score? You would be surprised let me give you some options. So the average credit score in the US is either 650, 675, 690, or 710. Where do you think the average credit score falls? So go ahead and think of your answer, and then I'm going to tell you it's actually none of the 4 that I just said. It's actually 711 if we're talking FICO, and it's either 675 or very close to that when we're talking VantageScore. So the average credit score, if we're talking specifically about FICO, the average credit score in the US is 711. And I think most people would categorize a 711 score as being a good score. Most people kind of associate scores in the 700s as being good scores. And I'm not gonna agree with that fully. I'm not gonna disagree with that fully. 711 is great, but you're really no better than average, and average in school is a C. And I think most people would agree that a C, that there are better scores that you can earn on top of that. You really want to be in the 760 and above score categories if you want to put yourself in what I call the safe harbor position, where you're going to get really the best deals from lenders. But 711 is nonetheless the average, or 675 if we're talking VantageScore. So what does that mean? What does that mean to have an average credit score? Just because you have an average credit score doesn't mean you're getting average offers from lenders. For auto lending, the best average interest rates are for people who have 720s or higher. So you're really only 9 points away from being in that position to get the best deals and best offers from lenders for auto lending. And what does that mean? In auto lending, that means either 0% from the manufacturer's financing arm, which is referred to as the captive auto financers. That's like Ford Motor Credit, Honda Finance, the financing arm of the manufacturer. So they can afford to give really aggressive interest rates because they're making money off of the unit, the car itself, the sale of the car itself. So non-captives, like your Chase Auto, your US Bank Auto, if you're financing with a credit union, they've obviously got to make some money in interest because they make no money in the sale of the car because they're not the manufacturer. And so they're going to charge, for people who've got really good credit, somewhere in between 2 and 3%. That's the best they're probably going to give you. If you have lower credit scores, lower as in low 700s, high 600s, you're going to start getting interest rates in the 4s and 5s and 6s. And if you've got really bad credit, they're going to ask you to put a tremendous amount of money down, and you're going to get interest rates in the double digits or higher, which is very punitive for an auto loan. So keep that in mind as we're talking about average credit score relative to auto. For mortgage, like I said, 760 or higher is really where you want to be. You're a good 50 points off of that at the average. So hopefully that gives you some sort of an indication of where you fall relative to the average credit score. If you have any questions about that, drop them in the comment section below and I'll do my best to get to them. Thank you very much for watching and have a great rest of your day. We'll talk again soon.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.